Good morning, guys. Hope you had a nice weekend. Happy Monday. And right, so basically, Dix is under a bit of pressure because we're breaking the C level. It's a support resistance level, and because we're below C, we probably should be targeting B. To be fair, now B is really important because it's the body of this harmonic. It's the spine of this harmonic. So if we break B, it's going to get pretty ugly for the Dixie. And don't forget, we had a change of the trend. We had a very clear uptrend. We consolidated a bit. This is all highlighted on Discord, by the way. And then we started this new downtrend, which you can see by eye because we're making higher, lower lows and lower highs. See, we were unable to go higher and break the previous high, and so we're falling. Here's slightly naughty, but inevitably we did break lower, and so that's that. So you can see how we're trending lower, okay? And so because we're below C, we probably might have to target B, but B absolutely must hold at 101.92, 93 area, okay? That's really, really important. If that breaks, then it's going to start really tumbling, and we might even come down to this this wedge, this wedge pattern, which is really far away. It's crazy. So that might even come into play. Don't forget the fundamentals are pretty good because the Fed are pausing, likely cutting. Sorry, we got our lower VIX. The herd are adding shorts to indices, which I can show you. So they've added short. They already were short, but they've added over the last 24 hours, which is bonkers. There's 16 people selling indices versus the one person buying. There's a load of bears left in this market. So that's really crazy. 68 is out of 100. We just reset that just before this video. So, we're okay. We're quite strong. We have come down a little bit because we were in the 80s on Friday. But, things have to take a breather, don't they? Dixie was fairly negative, you can see. Nikkei's come down a little bit. VIX has also been crushed, and the Nasdaq down ever so slightly, but pretty risk on, to be fair. And you want to keep an eye on that VIX, okay? Change from last Monday. They've added short on the France 40. GJ, GU and US 30, and they're pretty adamant on things to fall, and so they're adding short, okay? So they're convinced that we're still going to fall, and that's like a bit of a recipe for more upside on the indices. So that's the change from last week, okay? QDB scores, we can see how the dollar is fairly weak. You've got EU, GU, NU, AC, AU all at the top. And look how there's retail sentiment on those currency pairs. They're pretty adamant on these to fall, and so they're being very stubborn, and they're probably going to get punished. They see we've got positive price performance. Now, how to use the QDB scores? If something's red up here, it shouldn't be, so you're looking for buys. And if something's green down here, it shouldn't be, so you're looking for sells. And that's how you detect reversals. So it's very, very simple. So perhaps potentially maybe the pound Swiss could be okay. It's got a good score, but we've had a bit of a score change of a -2. So that indicates that little negative result there, -2 potentially. But if you say it's red up here, then you're looking for buys basically. You're looking for reversals. It can be can be quite nice and quite profitable, and avoid the mid chop as well. Some cross yen in the middle as well, it's worth noting, so probably avoid yen right now, I think. So let's show you the robot. I guess we can do the robot, and we've got some leftovers from Friday. So just a reminder that SL and TP is 25 pips each. There's no profit lock, there's no trailing stop, and there's going to be a signal once every 2 hours, but we can change that to every hour, if we want to. We'll have to see how we go. It might be that once every 2 hours is too less, and the 1 hour, it might be like the sweet spot, because we were doing it once every half hour, and it was spawning so many signals. I think we had probably, 15, 17 concurrent trades running, which is a bit bonkers. So I think probably less could be more. So we'll look at the once every 2 hours, and we can change that if required. Okay. Now the S&P Actually, we'll start with gold because I just did gold. Gold, well, they've gone long and they're adding along, so we shouldn't really be going up higher, but they might sell it over time. So we can create a box, basically. This is a punishment box where they've gone long and they did get paid a bit. So that we should, if they continue to go long, we should be below 2001. We shouldn't be above 2018 if they continue to go long. So that's key. So we should be falling on this, and we should be breaking this 2001 support. But it will depend, of course, what happens here. And don't forget, we've got a weaker Dixie as well. So this can probably do okay because it's cross dollar. All right. So you've got to remember we've got a bit of a softer USD in the Dixie, so we might be fundamentally okay on this one. And don't forget, the big picture, we are a buy here. But if they're starting to go long, it's going to go against the grain of that big picture sentiment. So if they continue to go long, we'll get closer to 50%. Once we cross 50%, and it's going to really fall. So you've got to be careful. Now S&P, I'll show you this. This is the thing that I noted was this curvature on the MA. Right. So what's that saying? Yeah, by tonight we might be it might be showing signs of a bit of a capitulation here. If it continues to curve in the way I think it's going to, it's going to gradually tick up, and then by tonight's close, we might be around here. If you can see the curvature of the MA. So we'll have to see. Today's going to be really important. Of course, if they sell it, then it's going to pump. All right, so you've got to be careful, trade safely. And we can revisit this tomorrow morning. Not a problem. US 30 isn't showing signs of curvature. It's just showing signs of descent, and it's just continuing lower. Okay, so this is probably going to pump, and unfortunately, those poor guys are going to get screwed over, which is pretty normal. And DAX is crazy. It's absolutely bonkers. There's no curvature, it's just completely flat. It's almost like they're just holding on for dear life. And then the thing is, inevitably they're probably going to be right, but if we continue higher, then these guys are going to have to start giving up. I would have thought 16,000 would probably do it, you know, being a round number and stuff. So I would have thought that would have sent some alarm bells, but it looks like they're just holding on, which is a bit crazy. It looks like a Wall Street Bets Redditor psychology that's going on here. It shouldn't be this flat. It's very, very uncommon and quite rare. We should be doing waves, but it's not waving, it's just dead. It's like flatlined and it's just dead. So it's going to be a big move on the DAX. I would keep an eye on the S&P today because I think that curvature is going to indicate, I know they're selling it slightly. Oh god, if they sell it, then it invalidates that idea of this ticking higher, because of course if it ticks lower, it invalidates that idea. So I think just be careful because we're so skewed, and also the Dixie as well. We can probably have a little bit of a zigzag. So I don't think we're going to get to B straight away. We won't go there in a straight line. We'll zigzag a lot, and do this, then come down to B. So, it won't go in a straight line, unfortunately. It'd be nice if it did, but it won't, because it has to accumulate positions. And so remember, things won't go in straight lines, they have to zigzag as well. So you've got to be careful with that. And know that we are in a downtrend, but we can have a little bit of a jostle and some hustle, and it might look like it's going higher, but keep an eye on this C support, because that's obviously a very important level, 103.60. I wholeheartedly recommend FXsidecom and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment, awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look, just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think. And like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the FXsidecom, and enjoy your day.